Hey guys, my name's Ravi and thank you so much for joining me on another episode of Search Property TV. I'm the founder and buyer's agent here at Search Property. So earlier this week on my Instagram, I had put up a story with a question and answer story where people had responded and put some questions up. So this is what this video is going to be about. It takes, some of the questions that are there from how much I'm charging to what are my thoughts on a few particular areas or types of assets, and then also about what my plans are and what my goals are in terms of property investing. So I'll kick straight in terms of everything that I discussed in this video, along with everything on my YouTube channel. It's non-financial advice. So if you do require that sort of help, then definitely do inbox us. We have a lot of resources that we can help you out with, and let's kick into it. So question here I have, now just a disclosure, I'm not going to be disclosing any of the names. I know that some people take personal finance very personal, and I totally respect that. So for confidentiality reasons, I've blocked out the names, but you can see the questions that come up. So how did you get into property? So this one's an interesting one. So my dad has been an avid investor and has been keen on investing. So when I first started my job, going from part-time work throughout uni to a full-time job, I started making quite a bit of money. And when I say quite a bit of money, it was about $55,000, $60,000. And at the time, it was a lot more than I had been used to. So suddenly I had all this income coming through, and every week I was spending it on ASOS and online shopping. So dad sort of got concerned and he said, look, if you're going to save up your money, this is probably the best way to do it. At least it's like a set and forget, it's on the side. So that's really how I got into it. But before that, I'd been studying markets. I understood, around the time that GFC had happened, I was very in tune with what was happening in finance and how money works and economics. So once I had understood why things were happening, I understood that debt was actually a good thing, and productive debt, that is. So for me, I pretty much understood the concept of investing and got his help in terms of where to look and what to do. I got to admit though, when I started, I didn't really have a strategy. I just sort of went into it thinking that this is a good use of my money. And so got into it, and then I found myself, while I was investing, I was doing a lot of research, a lot of time spent online and going to seminars and researching. So then I found my way into a proper strategy, and I got started into what were better assets in better locations. But that's pretty much how I got into it. When you say rural properties, what do you mean? So thanks so much for that question. People do get very confused with when I'm talking about rural, mining towns, capital cities, and regional centers. So a total transparency here, I don't invest in mining towns, and I don't invest in what are rural towns. So what I consider mining towns are exactly that. So they have a mining or coal mine or things like that in a particular area. And the suburbs that are around these areas, they're very volatile. So you could have a property that could go and double in value over a year, but it could also halve in value in 6 months. And it's purely because the only demand for work in that area is to work in the mines. Now, in certain areas, we've seen that already, regional Queensland and regional parts of Western Australia, where there are a lot of mining towns. They've gone through, various ups and downs, and that for me gives me stress and anxiety, and I would never advise my clients at all to invest in mining towns, purely because property is a long-term game, and you don't really want to be waking up one morning and seeing that the mines there aren't working or whatever it is, and they've moved out and that company's now somewhere else. That's going to give you just anxiety, which is not the point of investing in something that's a bit more passive with property. When we look at rural properties, that really is referring to, suburbs in the sticks or in the bush somewhere, where you can literally pick up properties for like $40,000. I try and stay away from those purely because there's no guarantee that there's actually a diverse economy there. The fundamentals of property aren't there in those locations. And for me, when I'm investing in an area for myself or for my clients, it's really about looking at what that area looks like in 20 years or is this a property that I could hold through multiple cycles? And are there enough fundamentals to push people to live there? Is there population growth? Is there net migration? So I stick to regional centers. So not rural towns or mining towns. Regional centers are basically the easiest way to say it, or give you a reference point. If you're based in Sydney, it's like what Newcastle and Wollongong were about 5-10 years ago. If you're living in Melbourne, then Geelong and Ballarat. These are the areas that were once considered to be regional, but they're basically smaller versions, more in its infancy to what a capital city is. So the numbers aren't as big, but at the same time, the fundamentals are so strong in these areas that they're actually really good investments. So, you know, when we're looking at Newcastle and Wollongong now, they used to be regional centers and now considered Greater Sydney. You know, for people that don't research and know about these areas, Newcastle, where you could buy a 1-bedroom apartment for about 250,000, is a market you can't touch, you know, now for at least 450,000. So when people talk to me about, you know, capital cities are the only thing that grow, regional centers have the fundamentals of a capital city. They're just a smaller version. They're just in its infancy. So when you're looking at numbers and cents, as investing should be, you will get that sort of growth. You will get, in some areas, higher levels of growth than what Sydney and Melbourne have seen over the last 20 years. There are examples out there, but the fact is that, you know, people just don't know what they don't know. So that's what I mean when I'm investing regionally. That's not to say I'm against capital city purchases. There is a lot of growth in these areas as well, but just timing the market and knowing when to enter a market is key. And I wouldn't be touching anything in a capital city right now. So question here is your buyer's agent fee a fixed fee or a percentage of the property price? So for those who don't know, with buyer's agents, we obviously have a fee and it's per property. So you have two models. One is a percentage-based model. So that's pretty much a situation where you purchase a property for your client and say it's $500,000, you would charge a percentage of that property fee. So it's very similar to how a real estate agent works. I find that very counterintuitive. What I mean by that is the real estate agent works for the vendor, the seller, right? So they want to get for their client the highest possible price, and they're incentivized by having the highest possible price because they're on a percentage of commission. Now, if a buyer's agent who works for the buyer is trying to get the lowest price, how exactly are you going to have a percentage of the property value play a part in, you know, your negotiating? So for me, it's counterintuitive to go, I'm going to get you the lowest price, but that also means it affects how much commission I make. So I've taken the model where, you know, a lot of other buyer's agents have also done so, is a fixed fee model. And that's pretty much where if a property costs 150,000 to, you know, 4 million, it's still the same fee. Some people don't really understand how it works, but that's something that we can discuss a lot more, and something that, you know, we are doing unique to a few other companies is offering payment plans. I totally understand being in your position. When you're starting out, it can be quite difficult to, you know, save for a deposit, then a stamp duty, and then you've got to pay a buyer's agent. So those are the things that we try and alleviate in this journey of you getting started and kicking forward. So a question here, any thoughts on NDIS housing? So that's the National Disability Incentive Scheme, I believe, or initiative. Look, the numbers are amazing on these things. And for guys, if you don't know what these are, it's pretty much housing that's been created specifically for, you know, disabled people. Now, although the numbers are amazing in terms of the amount you're going to get as a rental return, your house has been modified for one purpose only. And yes, you could, you know, break it down in terms of, you know, it's a new house. It looks exactly like any other house, but inside you've got, you know, wheelchair access. You've got certain things in there. And I think it's an amazing initiative. For me, it's that those properties are located in areas I probably wouldn't invest in. So purely from a cash flow perspective, there's also a lot of legalities in terms of how to actually get that sort of cash flow. And it's not something that, you know, I'm totally around, and a lot of other investors are actually still not totally confident with what that actually means and how someone goes about it. To get those numbers, and I'm talking about like 10, 11, 12% returns, the only way you get that is if you've got multiple people living in that house. There is a shortage, I believe. I have done very little research in this area, but from the research I know and the people I've spoken to, a lot of smart people, they just say that there's not enough information out there or reliable sources of information where there's real case studies for people having built, a portfolio of 3 of these. So for me, I don't know what I don't know, and from the little research I've done, it's probably not something I push for because of the fundamentals around location of these properties. Another question we have here is, how did you educate yourself? Very good question. It's been hours and hours of work and a lot of money. I'm not gonna lie and beat around the bush. Investing for me was, a side hobby, has now become a profession for me, but I really thought of it as a business after I got probably my 3rd property. I understood that it's purely a numbers game. Getting emotionally attached to the investments you make is like getting emotionally attached with parts of your business. And unfortunately, a lot of people can't seem to, divide the difference between the two. And for me, it's very important that, when I was looking at getting educated, I understood the right people to listen to. Someone that I am very fond of is an individual called Robert Kiyosaki. So he's the guy that wrote Rich Dad Poor Dad. He's very big on fake teachers and how there are people giving advice, or they're leading by example and calling themselves gurus or experts, when in reality they actually haven't done any of that. They're very good salesmen and very good marketing people. And so for me, it's been very important about understanding who the good operators are, who are the bad operators, who are working unethically, and who, work for the love of working in that environment. So it's been years, so 3 years, 2 to 3 years before I actually physically invested. I was researching, and that's anything from looking at news articles, looking at trading economics. It's a website I've mentioned on my Instagram before. Is understanding not just what's happening in suburbs or capital cities, is understanding what's happening, on a macro level, is understanding what is our government doing relative to the rest of the world. What's the rest of the world doing? If there's a trade war between the US and China, how does that affect us? And in the case of coronavirus, it's a worldwide pandemic, right? So you need to understand all the moving pieces of the puzzle. Fortunately for me, I have a keen interest in this. So anyone that knows me really well knows that I could spend countless hours on property. I could look at one property and then go down a loophole, a pigeonhole of looking at the statistics behind how much employment is forecast, how much supply is coming onto the market. And because I've got a passion for it, it means it doesn't really feel like work to me. So I could spend anywhere from 7 to 12 hours in a day in a single sitting sometimes, where it could go into any times of the, early hours of the night or morning, whatever you want to call it. So for me, it is very much about a passion project for when I started investing, but I realized that I've got a knack for this, and the stuff that I'm looking at, they make sense, and I'm leading by example by actually doing it. So I'm an active investor. For those who don't know, I've got 12 properties and I'm planning to have plenty more. So I'm always looking, and I also know the fundamentals around how to invest and what are the key things you need to look at to get both capital growth and good cash flow. Not just today, but in 5, 10, 15, 20 years, when these properties, these assets are supposed to provide you some sort of value in your overall strategy. So I guess if you were looking at getting educated, I would say definitely subscribe to the channel if you haven't already. I also have an Instagram page, so search property AU, and that's if you want real information on the pulse. So I put a lot of information up there every day, and sometimes it'll be about news articles, sometimes it's statistics that I'm sitting there and looking at. And so I decide to put those things up because I get so passionate about it. But a lot is happening at the moment. So if you aren't following that page, then you definitely should. And on this channel as well, Search Property TV, I pretty much put up 2 to 3 videos every week. So I try and get as much data, get as much free resources out there for you But something very exciting that I really want to announce, and you'll see it on my Instagram as well if you haven't, checked it out in the video. But it's pretty much that I'm creating a very exclusive, a very jam-packed newsletter. Now, this isn't like any other spam newsletter that you probably received from other companies or, Groupon or Scoopon or whatever. This is real data, real deals that we're doing on a constant basis, but also free resources. So if that is something that you want to, get your hands on, and I really urge you to take advantage of it, it's free. So if you want to download, or be on the subscriber list for that newsletter, there's a link in the description below. Definitely go and sign up, or just send me a message on Facebook with your email address, and I can get you set up with that. So that's every week. Pretty much the hottest news that you need in terms of no rubbish, a very reliable source in terms of no bias when it comes to what's actually happening. I don't have a hidden agenda. I call it how it is, and there's been people or clients that have wanted me to purchase, properties for them in capital cities too. So I am very transparent when it comes to dealing with people, and what I believe in is truly happening. And if that means there's less people buying in a particular area, I'm okay with that, as long as you're getting the best advice. But again, this is non-financial advice. So what service is included in the fee, i.e. ongoing after purchase portfolio management or guidance, ? So thanks for the question. I think this is a very big point of difference for what we are doing at Search Property versus all the other buyer's agents. Normally for a buyer's agent, you have the process of locating, negotiating and settling on a deal. That is pretty much what a buyer's agent gets paid for. So it's pretty much finding the property, creating some of the goals around what you want to purchase, and once it's settled, they get paid their fee, and that's pretty much the last you hear of them. The way I've tried to approach it, and is something that I really want to hold as a core value for moving forward, and that's why you'll notice it's buyer's agent and mentoring, is that we're creating a mentoring program. So it's not just about, hey, Frank, how are you? Let's purchase this property for you, and then I'll hear from you in a year's time when you're ready to purchase again. It's about continuing that relationship. A lot of the clients that I'm speaking to, a lot of the people I'm speaking to are young. They're starting out new and fresh. For me, it's very important to know that I am there as guidance, as a mentor to help you through that process. So I feel like you're paying the $10,000 or $12,000, depending on what package you go on, for investing in a property that you would not have even, got your hands on. But then after that, the amount of hours that is spent with you trying to mentor and guide you through certain tactics and strategies that otherwise would take you years to actually learn through experience. So when you're really looking at paying today for a value that's forward thinking, there is a real big point of difference. You're also going to find that a lot of buyer's agents have, hundreds of clients. So there's no way physically they could actually spend that much time with people. But the approach we've taken it is we have a certain number of people we want to service a year or help. And as part of that, a big part of that is mentoring. So the guidance really starts from the point that we've had a first initial consultation, which is free, by the way. And from there onwards, everything from, hey, Ravi, I'm thinking of moving for 6 months. What is the best way to set up my bank accounts? Or, is there any sort of advice that you have on these things? We can point you in the right direction. So it's not necessarily advice coming through from me. We do have the connections and resources for those things, like a financial planner and things like that. So there's a lot more support than what you would find. And I really urge you, if you are looking at getting a buyer's agent, is to go and speak to a few others, because you're going to realize in context that the amount we're charging is a lot less than what they are, and it's purely because our business model is very different to theirs. They are very much focused on a transaction basis, whereas for me, it's very important that I can take 10, 20 or 30 people through from day one, day zero, to go and design a decade, in 10 years time, to take them through a journey to actually get, financially free and have financial choice to do what they want to do. So for me, mentoring is huge, and so the fee would include that as part of it all. Okay, where do you see yourself in 5 years' time? So this has definitely changed over the years, obviously because it's a moving goal, right? But when I initially started with property investing, I was actually exposed to a strategy that worked at the time, where you purchase 10 properties in 10 years. Sounds pretty simple, but it was revolutionary in the sense that most people were like, how do I even buy 3 properties and you want to buy 10 in 10 years? So that was the strategy I had, if you can even call it that, an idea really, when I started. So year 1 and year 2, that's pretty much what I thought. And the basic concept was that property would double in value over 10 years time, and you could pay off your loans and then live financially free. Of course, times have changed and that strategy was very outdated with whoever I listened to at the time. So it doesn't really work in today's conditions. But if you understand how that works, that was my first look into what other options are there. And so now sitting on 12 properties and I've been investing for just less than 6 years, I understood that there is a formula. There is a secret sauce, if some people want to call it. I call it my blueprint. And that's something I share with everyone that sort of, wants it. So if you do want a consultation, and it's completely free for now, limited time only, because there is only so much time I have, right? So if you want to take advantage of it, and you should, then there's a link in the description, or head over to the website and put in your details, contact me, so we can set up a Skype session, or now with restrictions easing, I can come see you and we can basically create a plan, a blueprint for you, so that you can take that and ride with it. If that means that you're not ready to invest for the next 3, 6, 12 months, that's okay. But right now is the time to actually get educated and have a plan for yourself, right? Because if you wait for when you've actually got a deposit, you're pretty much too late to the party, because now you're going to wait 3 months to get your finances in order. You want to be doing those things well beforehand. So right now, with everyone scared, it means no one's really acting, but the confidence is coming back into the market. So be very wary of, how quickly you want to move, because things can move very quickly. Conversations we had a month ago are very different to what I'm having now, where it looks like Australia will reopen fairly quickly and a lot earlier than expected. But where do I see myself in 5 years? I think over the time I've realized it's not about how many properties you have, it's about what the value is of that property to you in your strategy. So in your strategy, if you're looking at 3 properties and that does the job for you, then great. But if you need 25 properties, then you need to work to get to 25. For me, I didn't really work with the number of properties, just the value it gives me. And so my goals have changed. Only recently did I really look at what that trajectory looks like. So my portfolio at the moment is worth 4.5 million, 4.6 million. And my plan is, so I'm 27 now, so another 4 years of investing, so probably 30, 31, to be very aggressive. And I would love to have a portfolio of 10 million by 30, just because they're round numbers. But of course, everything exponentially works when it comes to compounding of growth and equity. So although it sounds like 10 million is a lot, given my situation at the moment and where I'm at, but a lot can move very quickly. And this is what I keep saying. And if you haven't watched my live videos on Instagram that I do every Monday, I do put them up on this YouTube channel. So do check them out, because a lot is happening in the space of modern monetary theory and how debt is being accumulated around the world. It really means it's the death of the dollar, and it means that inflation will kick in. And when inflation kicks in, it inflates everything in terms of asset prices, goods and services that you buy for yourself, grocery market, grocery products. But what it doesn't inflate is your debt. And this is exactly what I've been saying for a long time, ever since I got started with Search Property, is that there is a unique opportunity where you can take your assets through a downturn and go into the next 10, 12 years of economic prosperity, and you're going to be holding today's debt. When we see inflation kick in at high levels, which we will in the coming years, because of all this money printing and money supply available, you're really going to thank yourself for having your money in debt with assets, because it's attached to something that's hard assets versus the money that's going to sit in your bank account. But that's for another video, guys. Okay, so final question. Your top 3 tips for someone who wants to get into the market. Guys, right now is a unique opportunity. So what I would be doing if I was starting out in this market is, of course, do your research, but give me a call. I can send you on the right path in terms of, what are the first 3 things you need to do. But I would start by figuring out my finances, figuring out my strategy, and then, researching about what professionals I need in that space. So when I look at, researching, I would say look at people like your Robert Kiyosaki's, your Grant Cardones of the world for when you're looking at real estate specific. When you're looking at terms of, trying to get your mindset right, because this is a big mindset game, people like Tim Ferriss, Gary Vee, Jay Shetty for some, those people are great to follow as well. And I would say if you're looking at more, what's happening on the ground, I would say you would pretty much want to be spending some time on realestate.com domain, looking at news articles, but taking the elements of what they're trying to say, understanding context behind why particular people are saying particular things. Not everything is as people say, and so it's very important to understand what sort of vision or perception they're coming from. So that's very important. And I think in terms of a strategy, that is something that I've learned takes a lot of time to get right. So if you can utilize professional people in that area, then you should definitely do so. So in my case, you can have that for free with me. If you wanted to drop your email down below, or contact me via the Facebook page. But essentially, you need to have an idea of where you're going. Most people will invest going, well, I just thought I'd invest, right? Because that's what I got told to do. 3-4 properties down the track, if you ever get there, you're going to be stuck because financing will be difficult and you're going to be in a position where you can't actually move forward and hit those other goals. So from the beginning, if you have an idea of the next 4 properties or the next 5 properties, next 5 years, you're really going to be in good shape to just tick off the boxes and just keep going. And that you use that as motivation. But if I had to give 3 tips, that would be it. Guys, thank you so much if you've watched all the way through. I really do appreciate it. I think I'm trying to bring as much value as I can on a weekly basis. So it would mean the world to me if you could subscribe to the channel and hit the thumbs up button, because then YouTube will allow this video to spread to more people that need it, because financial literacy is a very big issue around the world, and I'm seeing it a lot with people our age. If you're in your 20s, 30s and 40s, to be able to set yourself up now to look at what retirement looks like early, it means you could potentially be retiring by 50, and if you live till 90, you've got 40 years of living on your own terms, and so that's where I'm coming from, guys. It is really important, whether or not you use my services, is to really take the value that I'm putting through with these videos and go out and act. If I had to go an overarching idea or advice to anyone, is that it's all well and good you can spend hours watching films or videos like this or motivational pieces, but unless you're gonna act on that information, on that energy, you're not really getting any sort of benefit. So please act, and I'll catch you guys in the next video. Thanks.